Welcome back to Real Estate for Real with Arek and Elaine. I am talking to you here today, continuing our series on a couple of quick tips for first-time buyers, even second or third-time buyers. But here's some tips on what you need to know about credit scores. Okay, so credit scores, they range between 200 and 850. And so with a score of 620, that's considered desirable and above for obtaining a mortgage. So some of the things that factor into a credit score is your payment history, number one. So do you pay your credit card bills on time? Have you ever filed for bankruptcy? Have there been any liens, judgments, or collection activity on your credit report? Those things can have a negative impact. How much you owe and where you owe the money. So if you owe a great deal of money to numerous accounts, that could indicate that you're slightly overextended. However, if you spread the debt amongst a couple different accounts and you avoid approaching your maximum on any individual credit line, that can be to your advantage. So don't max out one credit card while you've got a bunch with a zero balance. Kind of spread the love a little bit. The length of your credit history is also taken into consideration. So if you don't have any credit cards or zero loan balances, it might help you to at least get one, just so that they know you are credit worthy. How much new credit you have is also an impact on your credit score. So if you are thinking about applying for a mortgage, probably hold off on applying for any new credit cards. Just kind of work with what you already have. There is different types of credit that you use, and the things that reflect positively on your credit report are installment loans, credit cards, and a mortgage. Try to avoid finance companies. Sometimes those can be negative impact on your credit, as though you might be overextended. Now, since we just talked about credit scores, let's talk a little bit about how you can improve your credit. Because of course, credit score is the biggest determining factor on how much interest you're going to pay for a loan and whether or not you're even qualified for a loan. So check for errors in your credit report. Every person is allowed one free credit report per year. Make sure you do that. You can go to annualcreditreport.com for your free report and then look at it carefully and correct anything that may be wrong. Pay down your credit card bills. If it's impossible to pay off the entire balance every month, do so. Try to avoid hitting your maximum credit line. Stay below that. And wait 12 months after any type of negative activity on your credit before applying for a loan. It's going to help give you a lower interest rate. Now, don't order new items for your home while you are under contract. The mortgage company is going to keep checking your credit right up until the day before the closing. So once you go under deposit, that is not the time to go buy a house full of furniture and put that on a credit card or finance it. So don't do that until after you close. And let's see. Another thing to keep in mind to improve your credit is shop for your mortgage rates all at once. Okay, so I know a hard pull on your credit will affect the numbers, but the lenders will consider it one inquiry if you shop in a short period of time. Okay, and as I had mentioned, avoid the finance companies, because even if you pay off their loan on time, their interest rate is very high and it's considered a sign of poor credit management. So those are the tips that I have for you today. I hope that they were helpful. Please remember to click like and subscribe, and certainly if you have any questions, reach out to us. We'd be happy to answer them, happy to help. I'm saying goodbye. This is Elaine with Real Estate for Real with Arek and Elaine. Thank you.